Good afternoon, everyone. May I present to you the paper entitled The Mean Reverting Behavior of Inflation in the Philippines. Whether inflation rate is best described as a stationary or a unit root process has several economic implications. If inflation rate contains a systematic pattern that is unpredictable, a shock to it has a lasting effect. In such case, effective inflation targeting is tough to realize. Manageable inflation levels have been a fact of economic life in the Philippines since 2002, at least. There are instances that low and stable inflation coincides with prudent changes in the monetary policy framework. In the Philippines, the Bangko Sentral ng Pilipinas in January 2002 formally exposed inflation targeting as its basic framework to monetary policy. This research addresses statistically the empirical mean reverting behavior of inflation in the Philippines and what does it reveal about the adoption of inflation targeting as basic framework to monetary policy. The objective of this paper is to test the inflation rate mean reversion process in the Philippines. The main contribution of this study is the application of unit root breakpoint innovational and additive outlier tests along with standard unit root tests for the Philippines using monthly data between 2002 and 2020. Formally, the method to test the stationarity of inflation is the unit root test using a variety of standard techniques. The standard univariate autoregressive AR process for representation of inflation time series takes the following form as in equation 1. The primary focus of equation 1 is the question whether inflation possesses a unit root. In this study, we performed unit root tests with breakpoints, that is the innovation outlier and additive outlier with both intercept and strand break to ensure robust conclusions. The innovation outlier model can be expressed as follows as in equation 2. To test for a unit root in the additive outlier framework, we have utilized the model with intercept and strand break as expressed in equation 3. The significance of innovational outlier and additive outlier tests is that we can establish important breakpoints usually associated with shocks on inflation time series. The monthly data of inflation in the Philippines from January 2002 to December 2020 were sourced from the online statistical database of the Bangko Sentral ng Pilipinas. The inflation rate time series is the headline inflation rate with 2012 as base year. Let's turn our attention to the results and discussion. Inflation rate in the Philippines has a mean value of 3.70% during January 2002 to December 2020 period. The highest rate of inflation was experienced in August 2008 at 10.5%. Inflation is generally stable with standard deviation of 1.99. However, the IRCHE statistics reject the null hypothesis of normality at 1% significant level. For the mean reverting behavior, in Table 2 and Table 3, the results of the ADF and GLS-DF tests reflect that inflation is stationary. That is, the null hypothesis of a unit root can be rejected at the 5% level of significance. The Phillips-Perron test rejects at 10% significance level the null hypothesis of non-stationarity of inflation. The null hypothesis of KPSS test that inflation time series is stationary cannot be rejected. Furthermore, the Nang and Peron test statistics, the unit root hypothesis for inflation time series can be rejected at 5% level of significance, which suggests that there is stationarity. Thus, according to ADF, GLS, Phillips and Peron, KPSS, and Nang and Peron test, the inflation rate has a mean reversion process in the Philippines. Results of innovational outlier test in Table 3 reveals that the null hypothesis of a unit root is rejected at 5% significance level. Thus, inflation rate is found to be stationary with one structural break in the intercept and trend in 2004 April, and in the intercept only in 2009 December. The results of the additive outlier test confirms the stationarity of inflation rate with only one structural break in the intercept and trend in 2011 April, and in the intercept only in 2008 February, as the null hypothesis of a unit root is rejected at 5% and 1% significance level respectively. As we see from the above results, the breakpoint innovational outlier and additive outlier tests support the mean reversion of inflation rate in the Philippines. Figure 2 provides the graph of the ADF Dickey-Fuller statistics and AR coefficients over the period January 2002 to December 2020 with breakpoints dates. The breakpoint dates corresponds to significant periods of global major economic events and monetary policy change shocks. For instance, the international price of Dubai crude oil rose in March 2004 on concerns over oil production cut by OPEC beginning April 2004. Similarly, in the futures market, the price of Brent crude increased, driven by the surging demand for oil in the United States and China, coupled with concerns over possible supply disruption given the volatile situation in the Middle East. These developments were captured by the April 2004 breakpoint observed in the inflation rate series. Moreover, the 2007-2008 United States subprime housing bubble crisis and the 2008-2009 global financial crisis and the collapse of the Wall Street was reflected in inflation rate breakpoints of February 2008 and December 2009. The Bangko Sentral ng Pilipinas is well known for its inflation targeting monetary policy. In its March and May 2011 meetings, the Monetary Board decided to raise the BSP's policy interest rates for the overnight borrowing rate and for the overnight lending rate to control broadening inflation pressures in the economy. Hence, the breakpoint of April 2011 in inflation rate time series is a consequence of these upward reviews of monetary policy. Thus, by introducing trend break functions in the unit root series without a priori information, we have been able to establish a good connection between the various breakpoints and the inflation rate time series. This is in line with the previous works by Peron in 1989 and 1997, by Clark in 2003, by Leven and Feiger in 2003, by Bielke in 2004, and of course, Chen et al. In 2016. For our conclusion, the ADF, GLS, DF, Phillips, Peron, KPSS, and Nang and Peron unit root test provide strong evidence of mean reversion processes. Moreover, inflation rate has mean reversion processes according to additive and innovational outlier breakpoint test. In conclusion, inflation in the Philippines followed a mean reverting behavior from January 2002 to December 2020. The policy implication of the above findings reveal that active monetary policies are not needed because random shocks will not have permanent effects as they eventually disappear in the long run. If inflation exhibits mean reversion process, the task of monetary policy will be more relaxed. Simply, inflation may well fluctuate around the chosen target range requiring little action from the Bangko Sentral ng Pilipinas. Thus, inflation targeting has been beneficial for the Philippine economy in helping promote stability in the general price level.